What is happening, investors? It is your boy Jack, and I'm feeling good today. It's just been a good week. We averaged over 5,000 views a day every single day this week. That is nuts to me. Yesterday I went ahead and bought 7 different stocks, and that's what we're going to be speaking about today. The 7 stocks that I bought this week. And there are some juicy stocks in there today, people. The portfolio is really starting to, grow very fast. A lot faster than I expected it to. We currently have 27 different companies in there. If you want to know what every one of them is and how much I have in each company, click the link in the description right now. It'll bring you to my Patreon and you will see my full portfolio and every time I buy new stocks. I was just lying on my bed before this video and I just got such an overwhelming feeling of, appreciation for everything that's happening on this channel. As I said, we went up over 5,000 views a day on average this week. Man, only a month and a half ago or so, I was lucky to be getting, maybe 300 views a day. The growth is just disgusting. And it is all down to you guys and your support, hitting that like button, subscribing to the channel, dropping all of the comments. You guys are the reason this channel has grown so quick, and I genuinely am just so appreciative. You guys are the reason I continue to make these videos every single day, nearly 2 months in a row now, with not one day missed. Because I love this, and I really did come to the realization that I just love making these videos so much. I wake up and I get so excited to make a video because I just look forward to the interaction with you guys. So please hit that like button right now, drop me a comment. I reply to every single comment, and subscribe if you're new around here, join the family. With all that being said, let's get into the 7 stocks that I bought this week. We'll start with, the ones that I bought the most in, and we'll work our way down. So the biggest investment I made this week was into Apple, and I picked myself up half a share at a fill price of $306. So just over $150 put into this company alone. I spoke about these guys a little bit earlier on in the week. I explained how I haven't opened a position in them yet, and now I finally have, and I'm delighted to have done so. If you follow the channel, you'll know that over the last week or two, I've been trying to, open up a position in all of the big tech companies. Apple, Amazon, Microsoft, Facebook, Google. Those are the 5 guys I really wanted to get some sort of a position in, and now I can finally say I own all of them. And tomorrow there'll be a video coming out about what stocks I'll be watching for next week, and they're going to be mainly dividend stocks. I have my positions in these guys now. Dividends will be my focus again, so keep the eyes out for that. But anyway, back onto Apple. So straight off the bat, we can see a dividend safety of 99. However, the dividend yield is only 1.06%. You don't really buy Apple for their dividend. That's not the main reason. But you know what? 1.06%, it's better than 0%. We can put it that way. They've only been paying this dividend for 7 years. Thus why it is so low as of right now. And one thing about Apple, they have a market cap of 1.34 trillion as of right now. That is a massive market cap. I believe it's actually the second biggest market cap out of any company in the world aside from Microsoft, who is currently sitting at 1.4 trillion. Warren Buffett, we all know who he is. He's an absolute legend in the world of investing. And Apple compromises of nearly 24% of Berkshire Hathaway's portfolio. A massive stake. So if somebody like Warren is willing to put that much money into a company like Apple, it's a pretty good sign that they're probably going to do quite well in the future. And if we just have a look at Apple's max stock chart, there's been some absolutely immense growth over the last 10 years. Almost exactly 10 years ago, if you invested, you'd be up 730-ish%. As of right now, you don't need to hear it from me. That's an absolutely insane return, and they don't plan on slowing down. Just look at the growth. The last 5 years up 140% still, so they are still growing at an absolutely fantastic rate. Now, quick look at Apple's absolutely beautiful balance sheet. Okay, so total current assets 143.75 billion. Total assets 320 billion. So massive assets, both current and long term. Okay, compare that current liabilities. Total current liabilities 96 billion. So they have plenty of cash on hand, plenty to get through whatever is thrown at them, and total liabilities 240 billion. So again, they are in an absolutely fantastic financial position as of this moment in time. Absolutely fantastic. They can deal with whatever is going to be thrown at them. And why I think a lot of people get so attracted to these big tech companies is that they're very simple to understand. They're Apple. We know what they do. They sell iPhones, they sell Macs, they sell watches, they even sell music and TV services. They sell a lot of services that are really useful and just really easy to understand. I'm recording this on a Mac right now. I also have my iPhone right here. I absolutely love Apple services, and I've said it before, I love investing in companies whose services I actually use, and I use quite a lot of Apples. I've owned Samsungs and Huawei's before, right? And as soon as I bought this phone, that was it. Only like a week later I bought this Mac because I just fell in love with Apple products, and I will be a customer for life. And a lot of people who buy even one Apple product will be customers for life. And having a loyal fan base is so important. Here's just a few key statistics describing why. So 65% of a company's business comes from existing customers. 43% of people spend more money on brands they're loyal to. A 5% increase in customer retention can lead to a 25% increase in profit or more, according to statistics about customer loyalty. Highly engaged customers buy 90% more often. The list goes on and on, but customer loyalty is so important. And Apple has built that customer loyalty. There's so many people who would have had an iPhone 4, 5, or especially the iPhone 6 who still have the newest iPhone to this day. They have Macs, they have iMacs, you know, they have all of these different things. They have the Apple Watch. Well, Apple is always at the forefront of innovation. They really are. A few things like the Apple Watch, for example, right? The #1 smartwatch worldwide, and it only works with iPhones. We know. Look, I'm a personal trainer. I know just how big these things are getting. Everybody wants a smartwatch, and everybody wants an Apple Watch, and it's the most expensive, and it's the #1. And if you want that Apple Watch, you have to have an iPhone, or else it is essentially useless. Apple Pay, another relatively new service. I forgot the PIN to my bank card multiple times now because I pay for everything on this phone with Apple Pay, and that is not a joke. As of right now, I don't know my PIN to my bank account. I genuinely don't. At least I know my money's safe. If I don't know my PIN, how can anybody else? But they're innovators, you know. They make new products and they make the best products, and that's why I absolutely love them, and they're one of these companies that I plan on holding forever and ever and buying forever and ever. A lot of people might say that this isn't a particularly good price point to buy at. With a company like this that you plan on holding forever and ever, I'm not too worried about the price point. You know, when we speak about companies like, you know, Delta, Southwest, or like, you know, Carnival or Nat, or any of those, you know, really volatile companies that you're more than likely not going to hold for 3 or 4 decades, it matters when you buy them. With a company like this, as a long-term investor, who really cares? You know what I mean? I don't. Dollar cost average. I'm going to buy it and I'm going to keep buying it regardless of what the price is, because I believe that through time their price will ultimately go up. And that will be a common theme for a lot of the stocks that we go through today. But anyway, that was stock #1, Apple. Absolutely delighted to have added these guys to my portfolio. Now, stock #2, a little known company called Amazon with a stock price of $2,379. So you'll see on the screen that I literally picked up 0.06 of a share, which equates to nearly $150 worth of the company. I don't have that much money to just go and buy a share or two of these. That's not who I am. I won't pretend to be, but I'm happy to have opened up some position in them, even if it is 0.06 of a share. Thank goodness for fractional shares, man, or else I would be absolutely done out here. Amazon, like Apple, is another one that people may think is overvalued. But look, this is a company I plan on holding forever. The world is slowly but surely moving online. It really is. And Amazon are that guy online who can sell you literally anything you want, man. I said this in my last video speaking about them. I can go get a SpongeBob suit. I can go get my groceries delivered to me. I can get holy bread. Anything I want I can get off them. And this is pretty much the only place I've shopped online since this entire lockdown has happened. I pay for Amazon Prime. Again, it's a service that I actually use, you know, and when you use a service, it's always nicer. And also a massive market cap of 1.19 trillion as of right now. Amazon's balance sheet. So again, a really nice balance sheet. Nearly 86 billion in current assets, 221 billion in total assets, 79.7 billion in current liabilities, and nearly 156 billion in total liabilities. So quite a nice balance sheet. They can handle anything that's thrown at them yet again. In the last 5 years, up 450+%. In the last 10 years, up over 1700%. These guys are performing absolutely incredibly, and I don't see them slowing down. The world of online fulfillment is only getting bigger and bigger as time goes on. I definitely plan on buying a whole lot more of these guys. I want these to take up a large portion of my portfolio. I absolutely love them. Obviously, they don't pay a dividend, but just look at the growth that they produce. Would you rather 1700% growth or a 3% dividend? The large majority of the companies in my portfolio do pay a dividend. The only ones that don't are the giants like this, who you expect to grow at an absolutely massive rate in comparison to most companies, or some of the higher risk ones like the airlines. Q1 earnings recently came out. Net sales in Q1 grew to 75.5 billion, up 26% year over year, an acceleration from the 17% growth in the prior year quarter. They are growing so quickly, and it's evident to see why they might grow even a little bit quicker now is because more people will be ordering more things online because they don't want to leave the house as often. What's the point in leaving the house and taking that risk of, contracting this really deadly virus when you can just go online and order the product straight to your door and it will get there in a matter of a day or two depending on what you're buying and where you live. With that being said though, Amazon's operating income did slip to 4 billion, which was a decrease of 9% year over year, while their earnings per share declined 29%. But considering their balance sheet and how well they are doing, there is so much room for growth in the future. Jeff Bezos, we all know who he is as well, he came out and said if you're a share owner in Amazon, you may want to take a seat because we're not thinking small. Under normal circumstances, in this coming Q2, we'd expect to make some 4 billion or more in operating profit. But these aren't normal circumstances. Instead, we expect to send the entirety of the 4 billion and perhaps a bit more on COVID-related expenses, getting products to customers and keeping employees safe. And that's a good thing. You know what it is? They're taking care of what needs to be done. And this is what every big company is doing right now. And that's why we don't expect the absolute best Q1, Q2 or Q3 from a lot of these guys, even if their sales are up. They're going to have, more expenses undoubtedly, especially a company like Amazon who is dealing so closely with the public. They're going to have to spend so much money on making sure that everybody is kept safe. But again, similarly to Apple, the long-term outlook is just absolutely incredible without a doubt. I'm not worried about what happens over the next 6 to 9 months. I'm worried about what happens over the next 30 to 40 years. That was company number 2. Now, on to company number 3. Now we're having a look at Microsoft. You'll see I bought 0.7 of a share for about $125, $130. This put my total holding in Microsoft up to 1.5 shares because I did buy these guys for the first time last week as well. You're starting to see a theme. This week I did predominantly buy just the mega tech giants. Microsoft has to fall in there. So a 99 dividend safety, again a small dividend yield of 1.1%. A market cap of 1.4 trillion and an uninterrupted dividend streak of 14 years. So again, relatively new to paying these dividends. It's not a company you buy for the dividend, but it's always a nice little bonus. I am really excited about these guys. They have an absolutely beautiful balance sheet. So current assets, 170 billion. Okay, total assets, 285 billion. Current liabilities, 58 billion. And total liabilities, 170 billion. So clear to see, an absolutely beautiful balance sheet. They're going to have no worries no matter what gets thrown at them. They are in a fantastic financial position. And again, they're just another company who has had some absolutely fantastic growth over the years, especially as of late, especially these last 5 years. The growth has been fantastic and I don't see them slowing down. They're one of the biggest big boys that there is. And again, what's nice about them is they're just really simple to understand. Some of their main services: Office 365 commercial and consumer products, which include Office, Exchange, Outlook, Skype, all of those things, a lot of which you more than likely use, okay? And then they use server and cloud-based solutions, and then the other things that you will know is traditional Windows businesses on PCs, as well as its Xbox gaming platform, and Bing search platform. Let's not even talk about Bing. The rest of it though is all fantastic and you more than likely use some of their products and will continue to do so forever. And I more than likely will invest in a new PC relatively soon, and if I'm to get an actual desktop, a PC, it is going to be a Windows one. It won't be an iMac or anything of the sorts. I like gaming, man, and Macs definitely aren't the best for gaming. That's one of the big reasons I might actually get a PC, is just to be able to play more games, because this MacBook can't do anything. And again, it's a tech giant and a lot of people may believe that it's overpriced. And in the short term, who knows? It may well be. I could see a 20% drop. Who knows what's going to happen? In the long term though, I am in no way worried. I fully believe that they will perform absolutely fantastically in the decades to come, and that is what's important. I'm going to leave Microsoft there just because I'm going to repeat a lot of the same points I would have said about Amazon or Apple. So that was number 3. Now on to number 4. Facebook. Again, we all know who these guys are. Absolutely massive company. I bought another half a share in order to get one full share in this company. So that's where I'm sitting with them right now. Now, I just want to jump straight into their balance sheet because it is an absolutely beautiful sight to behold. Current assets of 69 billion, okay? Total assets of 138 billion. Current liabilities of only 15 billion and total liabilities of only 33 billion. These guys have an awful lot of money, man. Facebook has more than 2.45 billion monthly active users. That is a big number. Most people in this world have a Facebook account and use it weekly, daily, monthly at the very least. They have a bulletproof balance sheet. They have so much money. they are going to be absolutely fine no matter what happens next. And it gives them so much more room to do so much more with their apps, with their services. Other massive social media apps that Facebook owns are Instagram and WhatsApp. Again, ones that most of you more than likely have accounts on. And then Oculus VR is one that also somewhat piques my interest because I do see a future in VR, but I'm not as excited about it. And then there's obviously loads of other little ones that I don't care about as much. But Facebook, Instagram and WhatsApp, three of the absolute biggest social media platforms in the world. Facebook owns them all, and they have more than enough money lying around to buy out any other competitors that could potentially rock up. I just see an extremely bright future for these guys, and again, it's one I'm not worried about what price I get in at. This stock could have been any price and I would have bought it. It does not matter to me. It does not matter what happens the next 3, 6, 9 months. It's what happens the next few decades. And with all of that cash lying around, who knows, there could come a dividend at some stage. So be it, it will more than likely be very small, but it could come. They have an awful lot of money sitting around. It's something I use Facebook. I'll more than likely make a business page on Facebook at some stage of the future where I can re-upload my YouTube videos and potentially monetize them on another site yet again. Who knows? But that was company number 4. They need no more explanation. It would just be repeating the Apple and the Amazon stuff yet again. Now, company number 5. And now we actually are getting away from the big tech giants. We have Southwest Airlines. You'll see that I purchased 4 shares of these guys for just over $105. And a big part of the reason I did this was because Warren Buffett sold all of his airline stocks. And a lot of people will think I'm crazy for that, but that is a big reason why I personally went and bought them, because the price just dipped so much, temporarily at least, because of this news. I'm sure every single one of you is aware of this at this stage, but Warren Buffett's company Berkshire Hathaway sells all of the US airline shares. Every single share. They don't have a single share in any of the US airline stocks anymore. And they had some massive positions in these companies. They had over 11% in Delta, I believe 10% in American Airlines and Southwest Airlines, and 9% in United Airlines. And poof, it's all gone at a massive loss. They probably lost between, $2.5 to $4-ish billion. What's important to know is that Buffett has had a shaky relationship with airlines for a while. He had bought them before and sold them all before, and he said he was never going to invest again. And then in 2016, he began investing again. And now with what's going on, Buffett is quite clearly afraid of how this virus is going to affect air travel forever, for the rest of our time, at least, for the next few years. He came out and said that he doesn't see the same amount of miles being traveled, in even 2 or 3 years time. And I have all of the respect in the world for Buffett, but that does not necessarily mean that I'm going to do exactly what he does all of the time. That's not what being your own investor means. I always say on the channel that I'm not a financial advisor, and you should always form your own opinions before buying or selling a stock or anything of the sorts, and that's what I'm doing right now. I understand my position in airline stocks, and I understand what I think will happen going forward. So just because one of, the smartest, best investors in the world shares a different opinion to me, doesn't mean I'm going to panic sell. And in fact, I went ahead and bought more. If you followed this channel for any period of time, you'll know that I love Delta, and they're my favorite airline, and they still are, and I have a much bigger position in Delta. But I wanted to diversify, if you can even call it that, and buy a second airline, and this is the one that I believe in very, very closely. Nearly the same amount as I do in Delta. If one airline is struggling right now, all of them are. And that is the case. Right now, airlines are carrying about 5% of their normal passenger load, which is obviously absolutely terrible. And we don't know when it's going to go back to normal. But more than likely, Q2 is going to be absolutely horrible, and Q3 will be poor, but it may be better than Q2. It's tough to know, but I believe that by next year, by mid next year anyway, if not the first quarter of next year, we will see some much better balance sheets. And for an airline, Southwest don't have the worst balance sheet in the world by any means. So current assets, 7 billion. Total assets, 26.8 billion. This is important because this is what will allow them to take out debt to survive in the short term until they have their normal passenger loads again, okay? So current liabilities, 10 billion. Considerably more than the short term, but that's why these long-term assets are so important. And then we have long-term liabilities of 17.8 billion. So obviously it's nowhere near as nice as your Facebook or your Microsoft, but it's definitely not the worst position in the world to be for an airline. Have to keep in mind as well, airlines are essential. We need them. They're an essential business. And because of that, they are getting help from the US government. So we can see that here, that Southwest have gotten more than 3.2 billion, 2.3 billion of which was in grants to support payroll, and 1 billion is in unsecured low interest rate loans, along with warrants that allowed the US Treasury to purchase up to 2.6 million shares of Southwest stock. So they already have quite a good balance sheet, and the government is helping them out. They will be making money, you know what, relatively soon. Nowhere near as much as they have. I'm not being silly, I'm not being completely optimistic. I understand just how dire the situation is, but I don't see them going bankrupt, and that's why I'm happy to invest in them at such low prices. They have money coming in, they've cut their spending absolutely massively. I believe in them, I really do believe in them. And when we look at the 6-month chart, these guys are still down more than 50%, and if you believe in a company in the long term, if they're down 50%, it's more than likely going to be a good price for you to get in. Now, I completely and utterly understand that there's a real possibility they could go down another 50%. It could very well happen. Who is to say, who is to know? But that was Southwest Airlines. I did speak about them a little bit earlier in the week. I'm happy to have this position. I know a lot of people won't agree. I know a lot of people are staying far away from airline stocks because of everything that's happening. I still believe in them, and that's why it's so important to form your own opinions. Now, on to number 6. We are looking at Delta Airlines. So another airline. I won't spend as much time on these guys. I've spoken about them so much in the past. And the reason I bought them is the exact same reason I bought Southwest, because of what happened with Warren. I don't need to explain that again. So I picked up some earlier on in the week. I actually picked them up on the 4th of May. You see, I got 4 more shares, so I have a total of 16 shares now, okay? At a fill price of $20.61. So when I bought them, Delta was down about 13% on the day. And you can see here, they actually closed today on $22.57. So straight away, on those 4 shares I bought, we went up nearly 10% like that. And it's been a bit shaky, but ultimately, we ended the week above where we started the week, you know? So be it, only 7%. But given all of the news that's come out, everything that happened with Buffett, such an influential man, it's a good week. I'm just going to leave Delta there. I've spoken about the grants. I've spoken about the cutting costs from 100 billion to 50 million. I've spoken about the dividend cut. I've spoken about everything I possibly can. So I'm just going to leave them there. I won't drag this out. So the final company that I bought, it was Johnson & Johnson. I only bought 0.2 of a share for about $30. I had a little bit of money left over after buying all of the stocks that I actually wanted. And I said, let's just buy a little bit of one of the really safe dividend stocks I own. And Johnson & Johnson got that $30. So you all know who these are. 99 dividend safety, 2.72% dividend yield. They recently grew that dividend despite everything that's happening, and a 57 plus year dividend streak. As far as dividend stocks go, in my opinion, these are one of the safest you could ever buy. I will more than likely hold these forever and ever. And that 2.72% dividend yield, considering just how well these guys are doing, considering how long they've paid this dividend, it is fantastic. I know it's below where we like it to be. I like to get 3.5% to 4%. But for a company like this, I have no issues with it. It's beautiful. No special reason I decided to buy them this week. I'm just going to buy them forever. Again, like the ones we spoke about at the start of this video. The Amazons, the Apples, the Facebooks, the Microsofts. I'm just going to buy these guys. I don't even care what the price is. I don't think we even need an explanation here. It's just who they are. I just put whatever extra money I had lying around into these guys. Gotta do that, man. Don't want that cash sitting around in the account. I may as well have it in a stock. And due to that reason, I won't even go into detail because there simply isn't any. So, as always, guys, I do really hope that you enjoyed. If you did, please hit that like button and subscribe if you're new around here. It helps me out so much. You don't even understand, baby. Support on the channel has been absolutely mental. I'm going to keep saying it because it is absolutely mind-blowing to me, and I want you all to know just how appreciative I am, because I really am. I'm not just saying it. I did not expect growth like this to happen at this rate. It is mind-blowing. I know it sounds really cliche, but it really is. Keep your eyes peeled for tomorrow's video, where I'll be speaking about the stocks that I plan on watching or buying next week. You always love those videos. Thank you all so much for watching, and I will see you for that video tomorrow, guys. Have a great day. Peace.